let's go to the fundamentals of the market. Anirudh Garg from INVasset PMS joins us now to discuss market fundamentals. Anirudh, good morning. Thank you so much for joining in. I wanted to quickly ask you and get direct to any specific names that you're liking in the market right now. Is it a top-down approach that you're following, or is it very specific to particular companies?
Hi, thank you for having me. Unfortunately, I won't be able to share names, but let's discuss about the sectors and the overall theme of the market, if you permit me. So I think we at INVasset are very, very clear that we are in a structural bull market. And all these chaos and confusion which have been created in the last 1.5 months post the Trump tariff of plus 25% kicking in. I think these are the things where market, particularly bull markets, they form their basis. I believe that if we see history, all the bull markets that have been there have arisen, were born out of chaos and confusion. And the more the chaos and confusion, the better it is. And I think that is a classic case right now. So first of all, we believe at INVasset that markets, our technical desk says that, and we believe that 26,300, which is the all-time high of the Nifty, we should bypass it, not even only retest it in the next 2 to 3 months. When it comes to sectors, okay, so we believe that the last run, the leaders of the last run, particularly CAPEX and PSUs, should not be the leaders of this run. Saying that, in CAPEX, we believe all those, and among PSUs as well, all those companies which are fundamentally very, very strong are doing something which is very, very essential for the nation, for which CAPEX cannot stop. They will continue striving upwards. All these sectors like defense, railways, infrastructure, power, they don't end overnight. It's just that the euphoria ends and the companies which are stronger will continue to do well. Apart from that, maybe I'm answering all your questions in one go, but it's just a flow going on. So apart from that, we also believe that the two biggest relative changes out there are the tax cuts that have been there, the GST cut and the income tax cut. A lot of income has come to the hands of the people. And when you have income, it's generally consumption plus savings. So any person, any company who can extract either through consumption or through savings should, I think this should be the sector where the leaders for the next bull run should come from.
Quite a lot of insight there, Anirudh. But, the flavor of today has been sugar. And it's not something that gets spoken about as it used to be a couple of years back when sugar was set to be a theme. But now with these latest restrictions that have been lifted, the sugar stocks getting a bit of a lift. Do you see this as a tactical play, or you may just want to avoid it and saying that this might just be end up being a one-off because it might just not end up shifting the fundamentals too much on ground and look for other opportunities in the market?
I think the biggest trigger for sugar, as the gentleman from Sri Renuka Sugar was saying, that India has its inflation under control now. So the long due hike, which is required, actually very, very essential for sugar, can now come through. And the government will also be more comfortable in giving it now. So we believe that sugar companies from here should do well. Will they be the leaders for the next run? That is what we hope for when we invest. I don't think so, because they're cyclical companies. They are as much as a commodity as you can get. And you have the only way to play commodities is you track their inventories, you track how the inventories are being depleted. We are seeing the diversion towards ethanol. So fundamentally, things are not bad for sugar from here. But when you have to play them, you have to be very, very cautious because there's a lot of volatility. The beta is very, very high. So you have to keep your stop losses. You have to make sure that you run them technically once you know that the fundamentals are in place. So if we go for sugar anytime in the future, we don't hold sugar right now. But if we see that there are breakouts happening in sugar, or we see some fundamental policy change coming, then surely we will play them, but only and only with a technical understanding and not for a long-term horizon, not a very long-term horizon.
Oh, that goes for all the commodity names, right? But Anirudh, right now, if there is any commodity-driven sector that you're looking at, which you think could do well technically, of course, you won't give technical answers there, but fundamentally, you think this could be the time for that particular space. So which one would that be?
Okay, so I feel especially for chemicals, specialty chemicals, what had happened in specialty chemicals was that a lot of capacity was set up till 2021. Post that, as China also relaxed its rules, there was a slump in chemical prices, and now we are again seeing that all over the world the chemical prices have started going up. The use of chemicals over the years have increased, is what we have seen. So now we believe that especially specialty chemicals is a space where you should not be bearish. I think the worst period for specialty chemicals is over. Also, I believe that one of the biggest fundamental changes that has happened in the markets is the distrust, a global distrust that has happened post the election. Or I can rely on anything for a company which is not very essential to me. But for things which are very, very essential, I have to make sure that I build capacities and I support my producers. So somewhere I believe that the fertilizer space should also be in focus going forward.
Indeed. Anirudh, there has been a lot of talk about electric mobility. Actually, before we get to that, the last couple of days or the last couple of weeks, we've seen a common theme. A lot of these bombed out names have done really well from lower levels. Paytm was a case in point from last year onwards, from levels of around 300 at the start of 2024. The stock is now 1200 plus. Even for names like Ola, from sub 40 levels, the stock has now gone up to 60. Even for MobiKwik now, of course, it's down almost 65% from its post-listing high. For people who wanted to accumulate such names at lower levels, is this still a bet that you would want to take, or you would want to move on to other ideas?
I think there's a huge potential in these companies. See, they are wonderful companies. Getting an app downloaded and then is a very big thing. We have tried it in our company, but overall, all these companies, they are wonderful, wonderful businesses. They have an ability to scale. They have very, very good managements. Whatever the euphoria was has been, taken down from the few years. Yeah, they have run up a bit, and I think they are contenders of buying on dips for sure.
All right, take that point. Thank you so much for joining in.